The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good break. I sure did. And guess what? The S&Ps are up again. Woo! All right. Nothing's changed here. Man, this is going to be a hard fall when it happens, when something upsets the apple cart. Ooh. But, we can't really do anything about it until that happens. And there's no technical damage. There was a chance, just to get right into it here, there was a chance to look at the S&Ps as if you're supposed to take some weight off because of that yellow peelback happening in the scanner on the S&Ps on the daily time frame. That means a new profile is coming out. Just want to reiterate that and how powerful of a mechanism that is. Got to warn you today, we've got the stock data in the scanner on delayed because we're actually switching everything over to another version of the scanner, another back end. So we're at the precipice of getting that out to you. And I hope you like my Pioneer hat today. These were always green, by the way. Now they've got a red one, and it's cool, and there's the Pioneer situation. But as we look at the S&Ps, a lot of times we talk about this a lot. A lot of times these fair auctions are completely explored. So high percentage chance is, and I know we've been in a crazy move up here on the S&Ps, that we might revisit these 23 areas down below. I mean, I'm actually looking at this as a pretty good sign to start taking something in the different direction other than the long side. So here's that stake in the ground. Scanner showed you that. By the way, on the weekends, new profiles are kind of already in force on the database. eSignal is not going to show them if you got eSignal yet, but we've already calculated those. We don't really use any mechanisms within eSignal, even though interactive data is driving the data behind the scanner. So as we look at this, you probably saw this profile this weekend in the scanner. I'm looking to try to leverage shorts. I know this is crazy sounding because there's no cracks in the armor on the breadth or anything else, but just the sake and the fact that we got a new profile in the S&Ps, I'm looking at this finally for the first time really ever on an intermediate basis to try to look at this as banking some shorts, playing defense above 23.51. That's a little bit more of a riskier trade than kind of trading with the trend. But obviously we've had a crazy move up here, and it might be time to start taking some off the table. Now, there's something else in your favor here. The 240s, 23.50 is sitting there, top of the profile, and you've got 23.51 top of the profile on the daily. So if you can just kind of crack and start breaking below here, below these inflection points, you've got 23.41, 23.42 first stop, and then you've got that much lower number at 23.23. Might not happen in a day, but that's the way I'm looking at this right now, just to look at a slight trading opportunity here in the opposite direction. Now, if you look at the weekly, just to reiterate here, there's just, nothing doing there. No cracks in the armor. Breadth is super positive. But how that happened. Who is that? Larry posting charts? Okay, there we go. All right, so that's the situation on the S&Ps. I want to go right into gold because this looks, believe it or not, more and more attractive to me. We actually had a weekly close above this, and we, again, this stake in the ground up top, we talked about these being the targets on the long-term 1236. We knew this way ahead of time. When this profile came out, locked in, and we caught that taking a different stance on gold going long. These were the ultimate finish the fair auction on the other side targets. We talked about waiting and see how it acted around here. I love how it's acting. I love how it's acting relative to what the dollar's doing. And, Tom had talked about, this is kind of the same trade, dollar, notes, gold, a couple of other things. But, you want to try to pick the one out that is kind of the leader of the pack in the anomaly, so to speak. So I like gold a lot. The dollar's had another move up here, and we're going to talk about that. But gold just spinning around, not wanting to get away from this inflection point, and more importantly, closing last week at 1239.10 above that inflection point. I just love this thing, and I love looking at the dollar actually showing me that gold is actually even more so a better play from the long side. Now the dollar, looking at the dollar now, moving into the dollar daily chart. Dollar's not revisiting these lower numbers like I was hoping for, and there's that 101.20 that I was hoping to look at to play defense against, to try to have this thing relax back down, but that's not happening. That's the way that works, and that's why, again, Tom talking about the dollar, the gold, the treasury trade. And what I just said before, you want to try to pick the one out that really is the least risky trade showing itself. If you're going to pick one out of these, gold obviously was very attractive based on some of those other instruments doing what they were doing, especially the treasuries. We're going to look at those really quick. We're going to look at the 10-year. All right, so we had talked about trying to catch a bid off these things last week. And again, a lot of relativity going on here. But if you look at the treasuries, you look at what the stock market's doing, maybe they'll pull the rug out on this treasury trade on the long side at some point again. But right now, I see this as a really, really high probability opportunity for you guys. 124 stops below there. Market's gapping up again. Treasuries are just kind of sloughing off a little bit. Any type of market pullback, if we ever get that, and God knows if that's going to happen, you're going to see these treasuries just spike up immediately. But again, put your stops in. You've got some places to play defense, mainly around 124, and then definitely below 123.10. And that's the weekly and daily numbers on the 10-year. But man, what a low risk trade, the way I see it. As so many things are being revealed in other instruments, and the 10-year just that relativity, kind of relatively strong trade, relatively weak trade. This is the way I'm looking at treasuries right now. We're going to look at the 30-year when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Larry, are you there?
I'm here, John. How you doing?
This isn't Larry. Who is this?
Yeah, it's me. We've got these monster storms across the west. But anyway, I got a little bit of laryngitis and cold. John, I wanted to ask you if you would spend a little extra time with that U.S. dollar, because to me that's going to be the key to these interest rate markets and stock markets and everything else. So anything you can share with the euro and the U.S. dollar, I'd appreciate it. And then I'm going to be on the next time I feel better. So thanks a lot, buddy. I appreciate all the good work you do.
Wow, thanks for calling in, Larry. And I'm sorry you're not feeling well there.
I feel okay. I just sound like, dog do, but I'll be all right.
All right. Well, take it easy, and we'll pick. We'll be happy to hear you tomorrow.
All right. See you later, buddy.
Okay.
Bye-bye.
Thank you. Okay. All right. So I've been commanded and mandated to review the dollar and the euro by Larry, and I always do what Larry tells me to do, so we're going to take a look at that again. Let's take a look at the dollar really quick. I didn't spend a lot of time on that, but, one of the things I was alluding to, was how a lot of these markets are interconnected. You guys know that. I'm sure you're rolling your eyes right now, me even saying that. But, the dollar, I also said, the stock market has made an incredible run. You guys know this already. When things move up or move one way really quick, a lot of times that portends sometimes a reversal snapback action the other way. So I've talked about Trump could come. There's a lot of different ways that could happen, like literally in minutes. One of them's via a Twitter message, which is incredible in itself. But people starting to get hip to possibly, currency moves usually are ahead of big market gyrations. And, if we start getting euro break, and we're going to go over the euro that I am kicking myself for even talking about being long that ever the other day. We're going to talk about that. That's what stops are for. But a currency becoming unhinged, and the dollar could move considerably up again. I mean, anything can happen. I've been talking about the dollar relaxing back a little bit, but these are the things that, if you think about it, companies really need to kind of reprice things, and they're going to have to make a lot of adjustments. And then some of the business models, like Trump could come out and, for instance, I mean, Jeff Bezos went and paid homage like somebody smart, trust me, because it seems like if you come into a Trump conversation with your dukes up, you're going to get hand grenades thrown back at you. But, Bezos went and met at that White House. But, I mean, all of a sudden, sorry to get off on a tangent, all of a sudden Trump could say, you know what, the brick and mortar guys have been taking it on the chin forever. This is just one thing that could, happen. I'm getting away from Larry's request here. But he could say, you know what, let's put an extra 5% tax on a federal tax on all online transactions. And Bezos's model is to go in and lose money on a different division until he runs everybody out of business. And his margins are in not on the AWS side, on the server side, but it's monopolistic. I mean, there's no way to look at it any other way. So, Trump could say, okay, wow, we're going to put an extra tax on that. And then a lot of folks' business models would come unhinged that are having razor thin margins to going to losing money. And I mean, anything can happen is what I'm trying to say. So one of the things classically that usually foreshadows some market changes are currencies. And right now, going back to Larry's question about looking at the dollar, let's just take a look at it again. I was looking at some of the comments in the den. You guys are funny in the den. I don't ever tell you how funny you are, but it cracks me up to look at some of the comments. If we look at the dollar, I was not exactly excited about doing anything other than just having a little bit of a trade and bounce down here on the weekly inflection points. I didn't think we'd start moving up again like this. I'm kind of in Tom's camp that we may start, coming down here. But if that doesn't happen, I don't know if you remember, I mean, a lot of multinationals, they don't want a massively powerful dollar. If you look at this now and you look at some of the technical damage that's starting to happen again on the dollar, and here's, again, we come off the weekly unfair highs, we break above daily profiles, we come back and kind of retest. Now we're trading above here. I'm not so excited about buying this thing, but the writing's on the wall that, it doesn't want to go back into the weekly fair auction right now, which is what I thought we'd end up doing, kind of a little bit of a empathetic bounce here off of that area just to do it, and then we'd possibly revisit. That doesn't seem to be happening. I've kind of gotten faked out of this. I mean, I actually tried to short this the other day below, kind of coming back into the profile. That's usually a pretty powerful situation there. But all it did was ratchet up another profile higher, which was bad news for shorts. I mean, you look at these, a lot of times, when we have a change in tone of profiles, that's usually another innuendo here to pay attention to, looking at these profiles that we have. But, also, and I'm going to talk about the euro now. The euro obviously is at least around 35% related in an inverse manner to the dollar. So I was kind of looking at this last week as, okay, we did the fake out, we closed back above the profile unfair low. There's some data that came out from Europe this morning. I'm sure you guys are aware of that too. And now we're breaking down again below profiles. So the dollar was at some resistance areas, in my opinion, and the euro was at support areas. It came out of my mouth, yes, that I was talking about nibbling on going long the euro as just a trading opportunity, and that's what happens when I go against the short the euro at all costs trade. But we've kind of gone a little bit farther south than I wanted to see it happen. So 105.86 is that weekly unfair low on the euro, and then that daily has also been broken down here. So all bets are off now on the long side on the euro. If you're in that trade because of something I said, that's what stops are for. We talk about a lot of trades that end up going positive, but this one is one I would say, don't try to double down on it. We're having technical damage on a weekly and a daily at this stage, and you can always get back in the trade higher. And that's what I did last week, and didn't exactly happen like I wanted it to. But again, trading is a numbers game. The British pound never could. This is our weekly on the British pound. Never could get back above and close above 125.39. So that kind of lets me know that this may start exploring some lower numbers too. We're going to talk about this when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And I was kind of joking but really crying inside that I'd gone against my religion and tried to buy the euro for the first time, God, in over a year. That's what you get. But, you got to throw out personal vendettas against instruments and things like that I've traditionally sometimes had, and take it for what it's worth. Look at the technicals, and it is what it is. This is nothing but a numbers game. Basil, Steve Rhodes, David White, Tom, everybody will say the same thing. It's you're going to have to take shots on when things line up, and if it doesn't work out, it doesn't work out. Having hunches in this business is not a good thing. And me kind of saying that, didn't want to ever short or be long the euro ever. There's been great long opportunities on the euro, technically speaking, and I've actually passed on them because of that fact, which hasn't been good. But this time didn't work out. And if you like apples, how you like them apples? Anyway, all right. So let's take a look at the British pound here. This is something. Okay, just checking the den here. Okay, so this is the weekly. We talked about this. The British pound kind of failing to kind of deal with it, kind of compressed up here on the long term. I actually thought we might get a pop here, and I thought the dollar was obviously going to relax a little bit here. The British pound is something I just don't see any edge here right now. I mean, I'd rather just, it's not exactly selling off relative to that dollar move. So I'm a little mixed up about the British pound. I personally have to pass on it. We're going to look at the yen. This has been an awesome instrument to trade. Here's that kind of dollarish bottom on the dollar was hitting that weekly inflection point on the top, and then the yen was hitting this kind of, we even talked about the back the truck up trade here down here at 111.67.68. And when you get into these weekly POCs and wide profiles, this is something else. I mentioned something earlier about just kind of reading profiles, kind of, I've seen this movie before type innuendo. When you have a wide profile, you've got to pay attention to these POCs. And when I say wide profile, I mean relative to, and again, this is something else. We put our money where our mouth is on these concepts, and some of the automation that we do, we'll pass on trading breakouts when profiles on a kind of we look back at like last 5 or 10 profiles average, and if this thing is like, I'm just going to pick a number, sometimes we use like 1.8 times, if it's wider than 1.8 times the most recent average of the last 10 profiles looking back in time, because we've got all this information obviously, then we pass on breakouts. And another thing is that trading inside the box on full automation, you've got to pay attention to the POCs. This is like the top of the mountain in a very tall mountain. That's kind of the way I look at it. So it's going to roll down one side or the other. So when you have these POCs, these blue lines here, this is the mode of the profile. And I don't really talk about these definitions a lot, but as we've kind of made this algorithm, and a lot of people use this information in the institutional world and retail world, I don't talk a lot about any of the other indicators that we have, because I kind of use a multi-time frame of profiles to kind of try to make sense of the minefield. But these modes of the profile, this is the most well-traveled, as we see it, well-traveled volume print relative to price. So it's always volume relative to price in these profiles. So this is the biggest, volume print type scenario that we feel is important. So it's the mode, it's not the average. If it was the average, it would always be in the middle. And as you'll notice, a lot of these blue lines are not in the middle, right? So there's not in the middle, there's not in the middle, there's not in the middle. This one kind of looks like the middle actually, but it's the mode of the profile. So it's, how many prints have really gone there in the most well-traveled way. So you've got to pay attention to this. So backing up to the yen trade again, these particular blue lines mean a lot more in a wide profile. So I don't talk about them a lot, but again, in a wide profile, we have to talk about them because historically and, looking back test wise and all that kind of jazz, we've noticed things. And that's the cool thing about doing back testing and strategy development and things like that is you don't have to really have hunches. You can have data to really back up your MOs when you're sitting down trading. So what do you do with the yen now? That's the question, I guess. So, I'm a little mixed up about the dollar and the yen right now. And, I'm looking at the yen trade actually as something that I don't have a lot of edge with right now. We've kind of done that bounce. We've reached the POC on the weekly, and now we're just kind of ramping up into the top of the daily. I'm concerned about being short this, and I can't bring myself to go long right now. So I think it's a pass in my book. Yeah, Steve Rhodes was. There's a couple of other people. Juan Villegas, who I haven't had on the show in a while. What he likes to do is take a lot of different profiles on multiple time frames, and if those POCs or those modes of the profiles, those top of the mountains, if you will, line up, then he's trading breaks on one side or the other. And he's looking at that on more shorter term time frames. And I'm assuming Steve Rhodes has probably found that to be a pretty powerful tool also. And Steve, if you ever want to call in, feel free to. We can talk about that. This is something I pretty much run my whole trading on, is some of these concepts that we talk about with the profiles. And again, I'm wearing my Pioneer hat today. They switched. They started making red hats, and it was green for decades. So a farmer friend of mine who farms about I think he farms 3,500 acres down in the eastern part of the state. Great soul, by the way. Muck, drained swamp. He gave me this hat, so I told him I'd wear it today. All right, let's go back into a couple of things on the futures side. I want to bring up the Shanghai, the CSI 300, excuse me. This is something we've talked about. Again, wide profile, POC, got to pay attention to it. This is our weekly on the CSI 300. We talked about this action down here, and really next stop up was ultimately going to be 35.21. This has been a really cool trade, and really hasn't given a lot of grief along the way. But remember, 35.21 is going to be your target right now on the CSI 300. That's based on a weekly number. And remember, we kind of use longer term time frames to take precedence over shorter term time frames. So that's a pretty strong number right there. All right, guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We were finishing up about the CSI 300, just lurching forward big time here. But remember, 35.21 is going to be a big number on that one. There's some, I don't know if they still advertise or not. I hadn't seen this commercial in a while. There's the China A shares, CHAD and CHAU on TFNN. That would be one way to trade easily the ETF relative to the CSI 300. China A shares. And we've done, this is so many things run through my mind that I go out in left field on when I'm talking to you guys. But the cool thing about the China market and the China A shares, there's so many, that old saying, fresh fish, blah, blah, blah. I'm sure you've heard all that when it comes to trading. It's kind of a net sum zero game, and you're basically you're battling against other people is what really in a nutshell it is. There's such a non-education in trading in general in China. It's completely a different market ecosystem, I guess, when it comes to traders. And that's why this thing gets carried away like there's nobody's business here. I mean, if what's happened with the China A shares in the past. The stuff that we've looked at and the models that we've run, I'm not going to say it's like taking candy from a baby, because it's not, but it's a lot easier to just run. I mean, models that don't work on the S&Ps or baskets of stocks in the United States arena seem to work gloriously when it comes to China A shares. Take a look at these things. Take a look at those ETFs, because you need to broaden your horizons for one thing, but it's a little bit easier to compete with idiots, I guess, to put it in another way, than it is to compete with sharks. And there's a lot of kind of elbow room to be right a little more often in these China markets, is what we've noticed. And the models, we look at the breadth calculations on the Shanghai and look at individual stocks, look at trading, the index itself. If you just trade breadth crossovers on the Shanghai, you don't even have to look at these profiles on the long term or the intermediate. You just, when the momentum changes relative to the underlyings, you can just start making money. But if you combine looking at these long-term profiles, and these are in the scanner, relative to those breadth crossovers, it's a heck of a lot easier than trading some of the instruments in the United States. And just uneducated investors in China, that it's amazing. And if you want to watch, I mean, another thing too is, when I'm in China, I even though I don't speak Mandarin or Cantonese, I like to look at what they're putting out on the TV. And there's literally like 3 or 4 technical analysis shows going on the stock market with complete gibberish, literally on TV. You're in the hotel, you got 55, 60 channels of the girls playing violins and playing the flute mostly. But some of them are actual like constant technical analysis shows on TV. It's amazing, and it doesn't hold a lot of water. So not only are they uneducated, they're being told the wrong things. So how do you like that? All right, going back to the S&Ps, just to kind of recap this a little bit. I'm looking at this. I said this earlier. This is really kind of being a little cowboyish here, but we've got a new profile. The unfair lows on the daily, 23.23. I'm looking at trying to play around with this a little bit to start explore some of this profile below this 23.51, 23.50 area. There's no cracks in the armor when it comes to any of the breadth statistics to be on that wavelength, but we are pretty overextended here on the breadth calculations, and a new profile here outputted this morning. All right, let's take a look at Home Depot. I've been kind of banging the desk about this one to keep buying something that continues to outperform the market. Got another nice move this morning, trading 145.57. So trading now up here. Again, this has been one, showed a lot of relative strength early, and now we're gapping up a little bit this morning. We're trading about up in here. This is the weekly, not showing that print yet. Is it too high? No. This is one, if you're not in it now, it's almost impossible to buy it, but don't try to step in front of a train. There could be more people getting into this thing and shorts covering this morning, so don't know if that's a wise trade. Let's take a look at Tesla. I want to see what's happening here. All right, so the ultra long term, this is our weekly. Man, what a short squeeze, huh? Ooh. Closed actually higher than it opened last week, but this is, again, we stock in an uptrend, a lot of shorts in it, had provided a place, relative to profiles, long term, can't be short. But as we look at this, the daily, when you have a new output, and this is Friday's action, new profile, boom, gave you a chance to look at picking a battle there, bounced about 10 points there. So what's happening this morning? We're trading 275.50, so we're up even higher. The risk reward, the high risk reward trade was on Friday morning. This was actually in the scanner showing up as uptrend support on that custom sort. So again, giving you a chance to play defense, get some high risk reward scenarios in your favor. Doesn't have to go back up to 284.27, but if you did that trade, maybe take half off. This is a scary mama right here. All right. Coca-Cola. Not a big fan of being long this stock. Had kind of opened below 40.51 and reversed last week. Actually Thursday. So what do you do with it now? I think it's a pass now. There's no edge here whatsoever in Coca-Cola to trade it long or short. And we hadn't hit crude oil. Let's take a look at that. All right, so we've talked about targets on this one on the long side bounce initially 54.46. That's the top of our daily profile. We're there right now. If you've been listening to my angle on this, and again showing itself supremely relative to what the dollar's doing. We've been talking about again trying to just only take longs. Now you've got a reason to take some off. We've gotten to the top of the box here on the daily on crude. I wouldn't short this. There's a lot of things pointing in the long favor here now, especially with the dollar kind of clarifying things this morning, being up again and crude going up at the same time. So We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Just a reminder, Larry's not going to be doing his show next. That's awful that's not going to happen. He's got laryngitis, and we hope he gets better, and hopefully he'll be back on Wednesday. Just a reminder to everyone. Wow, there's a mass exodus out of the den now. God. Everybody's trying to get out of the door at the same time. All right, let's take a look at I might fill in. God, there's a lot of people really leaving now after I said that. Here we go. It'd be nice if me and Steve Rhodes did the show together. That'd be awesome. Kansas City wheat. We talked about this being I was falling in love with this setup here, and still love it. Had a killer move up off of those, again, kind of coming down into this inflection point when John from Philadelphia was nice enough to alert us to this. And one of the things we always talk about is, okay, what's the long-term MO? Then we kind of dial over to the time frame, shift over a time frame. So kind of figure out the time frame to the right, in this case the daily, to kind of regulate that trade up. So started getting the bounce off the weeklies. This is kind of more of a long-term, give yourself a little room to be wrong type trade. But when you look at the daily and you're kind of in action finally, when you get these yellow bars happening, just like we had talked about, I forgot another instrument earlier, you got to be willing to look at that as like, hey, the thing may be resting at least for a little while. And these are in the scanner, and this probably started showing yellow probably when, I'm assuming probably like the 468 down to 466. When you start seeing those hints of new profiles attempting to appear, this means that a box is really here already. So this line, this red line and this green line actually were flashing this profile literally when this was turning yellow here. We don't put it there because it looks like we're painting the tape in retrospect. But this is the profile it was trying to emit at that point. So this, again, how do you manage the trade moving forward on those long-term deals like we just spoke about? You shift over a time frame. You just kind of look for new inflection points or new attempts at new profiles here. So what do you do with the wheat trade now? The smart thing to do probably would be to wait until we got back above 457 now, because anything can happen. I mean, these things don't go in a straight line. You could have some more downside damage here, but the powerful setup happened. I hope you guys were looking at that at least, to learn something if nothing else. But right now, this will be kind of maybe the long-term trade, leave a couple of contracts on, whatever, just to kind of make sure you understand that you're supposed to be long and not short. But as Joey and I had talked about, but 457 is a big number. Would love to see a daily close back above there. Then you've got a chance to play defense on some more weight on this particular trade. Nothing bad happening on the weekly here. All righty. All right, got about a minute left here. Let's take a look at Amazon. Talked about not shorting this thing, but we are at weekly unfair highs here. And this morning we're printing about 849, so we're right there. Again, I feel like Trump's going to say something at some point vindictive towards Bezos. So I'm not playing around with Amazon, but this is where we're at right now. Guys, you've been great. Larry's not going to be doing his show. We'll see what we can do to fill in, but I'm not promising anything. We'll be back again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.